And we focused a lot on what are the differences, what are the things that they have as unique. But here's my question. What do those engagements actually have in common beyond, well, they all follow SARS? And there's a number of things we need to think about. So let's jump in and take a look at those similarities. We're going to start with what's called the three-party relationship, meaning that there's always going to be three principal parties involved, whether it is a preparation, compilation, or review engagement. First off, you need whoever is responsible for the financials in question. Typically, we just call that management. Second, there has to be the accountant practicing as a public accountant who's going to do the work, the actual engagement. And then third is whomever is actually the user of the financial information. Could be any number of particular outsiders, but broadly stated, intended users. So those are the three parties: management, the accountant, and the intended user. Let's delve a little bit deeper into each. So in this relationship, what is management's job? Well, first off, they have to decide on what is the correct applicable financial reporting framework. So they would determine, is it US GAAP or is it something else? And to the extent they have choices as far as accounting policies are concerned, they need to make those decisions. They are ultimately responsible for ensuring that the financial statements are prepared properly and fairly. They are responsible for DIM. That's the shorthand: design, implementation, and maintenance of internal control. They are responsible for compliance with laws and regulations, and they are responsible for the prevention and detection of fraud. In other words, they need to have an awareness of the different elements of common fraud, right? We've talked previously about the fraud triangle. We've talked about the different types of fraud, things like financial statement fraud, which is the financial reporting version of lying; asset misappropriation, that's stealing; or a broader issue of corruption, which is effectively cheating. So these are all part of management's responsibility. In addition, they have to ensure the accuracy and the completeness of any supporting information, records, documents, and not to mention the explanations to questions that they can provide, and really any other information. And they have to give the accountant necessary access to and all information that that accountant needs in order to complete the engagement they've been asked to complete. So that's management's responsibility. Second party, accountant in the practice of public accounting. Well, we know that management creates the engagement, right? Ultimately, they are starting this process by saying, we want you to come do this. It's the accountant's job to then execute that engagement, whether that's helping to prepare the financials, whether that's helping to compile the financials, or completing the tenets of a review engagement. That's the accountant's ultimate responsibility. In order to do that effectively and in compliance with the standards for such engagements, what should the accountant do, regardless of the type of engagement? Well, they need to understand the accounting policies, principles, and typical practices of the industry in question. They need to comply with any and all relevant ethical requirements. At a minimum, that's going to include the AICPA's Code of Professional Conduct, likely would include the specific rules for that state's Board of Accountancy, and any other applicable regulatory agencies. And it's important that in a compilation or review engagement that a partner determines whether those ethical requirements have all been met. No matter the level of engagement, there's an expectation of the exercise of professional judgment, and there's an expectation that the firm will maintain an appropriate level of engagement level quality management for each such engagement. You can see here a list of some of the elements that would be part of that system of quality management. How about the third party? That's the intended user. This can be one person, could be many people, could be classes or groups of people who certainly need to understand the limitations of the engagement and the limitations of the financial statements themselves. Now, given the nature of the engagement, could the intended user in fact be management? Yeah, that's possible, right? Especially when you think about preparation engagement, perhaps that the reason they brought in the CPA is to say, hey, we've never done this before. We really need your help so that we can understand how the heck this process even works. Could the intended user be someone else but within the same entity? Sure. Could it be from a completely different entity? Absolutely. However, is it the accountant's role to identify who those intended users are? No, they bear no responsibility whatsoever for doing that. All SARS engagements require documented understanding with the client as to kind of the ins and outs of the engagement. So that is going to need to be in writing. Typically, that's an engagement letter that lays out the terms of the engagement. Now, that would be in accordance with what SARS requires and any other set of standards that might be applicable. And we'll talk more about that in a moment. This is a written agreement. In effect, it's a contract between management, governance, and the accountant in question. Governance may or may not be necessary depending on the particulars of the engagement, but that's ultimately what an engagement letter is. It's a contract. It says, I promise to do this, you promise to do that, and we're going to get paid so much money to do those things. Now, as for the other frameworks, so in this type of engagement, could we be asked to perform a review or a compilation or a preparation of U.S. GAAP financial statements? Definitely. What about ones in accordance with international financial reporting standards? That's entirely possible. But it could be something other than those two as well. Ultimately, it could be in accordance with what's called a special purpose framework. A good example of that is cash or modified cash or the tax basis of accounting, or it could be some other framework that's generally accepted in another country. Bear in mind, there are countries that have not adopted IFRS or have only adopted IFRS in part. So in effect, there are still plenty of countries out there that have their own unique system of accounting rules. Now, if it is prepared in accordance with a special purpose framework, they would be not appropriate in their format unless the financial statements were to also include a description of what that framework is, including a summary of relevant, significant accounting policies, as well as where that system of accounting materially differs from U.S. GAAP. Beyond that, disclosures are similar to what's required by GAAP, and the statements would still contain many of the same items that you would expect in U.S. GAAP financials. I look at this to say, in large part, under any set of standards, there's going to be more similar than different, but we do have to highlight what those differences are. Now, a more interesting one is, what if it's a framework generally accepted in another country? All right, number one, we do need to have an understanding of that framework. Second is based off one key question. Who's going to get the report? Okay, if the following are true, meaning broadly stated, we're saying this is generally for use outside the United States. In that case, we say, oh, all right, well, if it's outside the U.S., that creates less of an intrinsic conflict with U.S. accounting rules and so forth. So in that case, you have a choice. One is you can use a SARS report. However, that report would make reference to the note in the financial statements that discusses the basis of accounting that's being used. That would include identifying the country of origin, as well as and the identification of the specific accounting principles. Or they could use a report that would be correct for another set of such standards. So basically, we can either use the SARS report or an alternate format. And the reason we're allowed to do that, I guess I could say, is because we go, but that's all right, because the only people who will ever see this are folks outside the U.S., or at a maximum, there could be a discrete limited distribution in the U.S. But broadly stated, these are not designed to be generally used in the United States, because that's the other scenario. What if there is going to be distribution in the United States? In short, that removes the second option. Now, the only way you can do it is to use a SARS report that would include the requirements related to financial statements prepared in accordance with a special purpose framework. In short, in the case like this, we treat that foreign set of financial standards as a special purpose framework, just like the cash basis or tax basis of accounting. Now, the framework, GAAP, IFRS, whatever, Also, we'll define what makes up a set of financial statements. Normally, when we hear complete set of financial statements, certainly this is how US GAAP would look at it, is a balance sheet, an income statement, a statement of cash flows, a statement of equity or changes in equity, as well as the footnotes. I would add to that a statement of comprehensive income in the case of US GAAP. Now, just like an audit, can we be asked to audit a full set of financials? Of course. So logically, could we be asked to prepare or compile or review a full set of financials? Definitely. But could they ask us to do the same with a single statement? Say, we just want you to review our balance sheet. Yes. Does it have to be for a year? No. Certainly we could perform a review or compilation or preparation for a 1-year period, but could it be longer? Sure. Could it be shorter? Of course. So we have much the same latitude. I like to say, if it's possible to do it in an audit, why wouldn't it be possible to do it in a lower level of engagement? And so that's generally the rule, is that if you can, in an audit, you can probably do it here too. All right, we've got more ground to cover. Specifically, we need to do a little deeper dive into the different types of SARS engagements. We'll start tackling those on the next video.